Welcome to Perth Partners and welcome to our first bulletin introducing the Goldfields Resources Fund. Goldfields Resources Fund is a sub-fund of Perth Global Funds plc, an open-ended investment company registered in Ireland and regulated by the Central Bank of Ireland. The fund is a Qualified Investor Alternative Investment Fund, or QUAIF. Goldfields Resources Fund has been established to invest capital into junior miners that operate in gold, precious metals, diamonds, gemstones and the rare earth minerals sectors. Perth Partners is an English-registered, limited liability partnership that specialises in providing mining finance consultancy to the junior mining subsector. This bulletin and those that follow are designed to provide you with a view of the resources sector, interesting junior miners within the sector, and most importantly, to provide you with an update on the activities of Perth Partners and the Goldfields Resources Fund. So I hope you enjoy this brief bulletin and do come back and visit us again. So what do we think is interesting in the market? Recently, and albeit briefly, gold touched $1,300 an ounce for the first time since August last year. Though with gold currently trading at $1,288, we suspect this was very much a temporary peak, because within the precious metal space, we're in for a bumpy ride. Using average monthly pricing data, we see that platinum's relative value has plummeted against gold. It is a rare sight to see such a contraction of this pricing differential, especially to the current low levels. On January 21st, the pricing differential turned negative, the first time since December 2008, following the collapse of Lehman Brothers. We need to go back to the recession of 1991, the disinflation of 1984, and the market lows of 1982 to find negative pricing differentials between the two metals. Looking back even further, the differential went negative due to the peak prices of gold in 1980 and 1974. This raises some questions. Does the market really believe that gold is worth more than platinum? Possibly not, but it shows that there is a real loss of value in both metals, and that, for us, offers opportunities. The typically higher extraction price for platinum, as deposits are generally more diffuse, should drive the case for a pricing premium of the white metal over gold. With gold low, and we feel remaining low for a while, the loss of real value in both gold and platinum provides us with opportunities. Opportunities to create real returns for investors and yet remain a strong and supportive shareholder to good quality junior miners. So where is the market on this?
Market pundits are making, in typical market fashion, a lot of noise as to why and how the price of gold and platinum compare, both in terms of market and investment return terms. Academic commentaries have told us time and time again that gold, while seen as a safe haven in troubled times, is not a true investment, partly because it doesn't provide a yield to investors. But with cash yielding nothing, does that mean cash is not an investment? In the end, though, does all this noise really matter? For the academics, remember, facts are often stranger than fiction. Over the last few years, there's been a relatively stable demand for both the white and the yellow metals, but with the industrial demand for platinum continuing to account for over 50% of total demand, the tight pricing differential will not remain for long. As for gold, jewellery and industrial demand remains flat. And at a time when the world has been anything but a safe place, gold has continued to lose its intrinsic value. So is it really a safe haven? We believe early investors in gold are treating gold more as a standalone asset class than a wealth protection strategy. So why do we have such a suppressed price? Well, in the heady days of the resources boom, the higher prices drove uneconomic supply. The costs of production and cost controls were being virtually ignored. Now, with gold at $1,200 to $1,250, a miner with out-of-ground costs of $900 will struggle to deliver profits, growth and value for shareholders. More efficient mining companies are still making and generating solid profits. Why? Because they have sensible levels of corporate overheads. They invest in the day job of identifying and delivering current and future reserves. And most importantly, they have control over their extraction and production cost centres. Inefficient mining companies with expensive extraction costs are doomed to a future of acquisition or failure.
For an investment fund like Goldfields Resources, this all simply adds up to opportunities. Opportunities that with the right approach and the right capital backing can realise solid investment returns. Platinum should provide this opportunity over the short to medium term, with gold coming a little later. Gold is an asset class, and an underappreciated asset class at that, but one that is full of potential to outperform. What an opportunity! So where are we with the Goldfields Resources Fund? At this stage, the fund opens to receive cash from the 1st of February, with the initial offer period closing at the end of the month. From the 1st of March, the Goldfields Resources Fund will be fully operational for investors and investees. So where are we looking beyond March? Currently, Perth Partners is assessing a variety of mining finance projects. We're currently in discussions, some early and some more developed, with 6 companies, and subject to due diligence, we intend to present these potential deals to the fund in the summer. At the time of filming, we anticipate closing the initial offer period with £10 million, predicting £25 million by the close of the 3rd quarter. It is an exciting time, and I hope you will join us, and thank you for your time. Please keep an eye on the website www.perth-partners.com for more information, including our prospectus. And I hope that you'll join me again soon for another update. Until then, good prospecting and goodbye.